Hi guys, as you know, what we do is that we are actually looking the market structure and trying to get the two of the three of the higher time frame market structures aligned to go with the one direction. But what ICD said at the 2017 video, I guess, that he was suggesting a no-brainer method with EMAs, and it was like 10 EMA, sorry, it was like 9 EMAs and 18 EMAs, or it can be 10 to 20, but I'm using 10 to 20. So when there is a 10 to 20 EMAs aligned in the same direction, like 10 crossing above the 20, then we are in upflow. Okay, then when we are going to lower time frame, like what he was suggesting, that we go to the 1 hour, and we are only trading the things that 1 hour EMAs and the daily EMAs align. So daily EMAs are now bullish, 10 above the 20. Now let's say at this point, at this candle close, now we are bullish in the 1 hour EMAs as well. So we are just going with the EMAs until the EMAs are just not aligned. So we are just waiting them to be aligned again. Now they are aligned, so we are going with them. But what I use, that I just use it with 4 hours, so daily and 4 hour. What I basically use in trading, basically what I use that actually with the market structures is generally 4 hour and daily. So I'm using the 4 hour and daily flow in the EMAs as well, with the EMAs. So simply I'm just looking the alignment with the EMAs. I'm doing EMAs when I'm just busy. So when I'm driving, for example, I don't want to look at the market structure, is it clean? Sometimes I don't have the time to look at it. I'm in the office and I can't just consider every single time the market structure, how is it, and if there's an ambiguity, of course. If everything is clean, so I wouldn't mind myself, and I would just actually use this weak fractal indicator, and my charts usually like this. But as I said, when I'm busy, I don't want to try to give any mental capacity to this, so I'm using the EMAs then, and you can simply do that. Okay, when the flow is clean like this, these expansion phases, as you see, when even though daily and 4 hour is not aligned, as you see in here, the EMAs are not crossed yet, and actually they are crossing back here. But as you see, when they just flipped above it, it's actually enough consideration to go long. Let's look at some couple of maybe we can call it a fake market structure breaks to the lower side, but it doesn't affect the daily structure. So for example, I just find an example here in Australian dollar CVC. So as you see, we had actually alignment of 4 hour and daily EMAs, and as you see, there was just upflow, then it broke back here. What we do is, normally we have now daily market structure is bullish, like this daily market structure is bullish. We look to 4 hour market structure, it is not bullish, it's bearish now. It break the structure here at this point. Now we focus on this area. Okay, focus on this area. We are now looking at this area. Now it's bearish, and what we do is actually we go to the 1 hour chart, and we look at the 1 hour chart is bearish as well, but market is crossing back here. Then it's breaking the 1 hour structure again to the lower side, then it's breaking again. When we are going to join the upflow, we are not going to join the upflow here usually, because the 4 hour and 1 hour is now bearish. But when it breaks back above, now we can go with the daily and 1 hour against the 4 hour structure. Now 2 to 3 of the higher time frames is aligned, so we would go with the higher time frame flow now. But as you see at the EMAs, it's not actually crossed back. So this market structure, you can think this is not closed with the wicks, but you can think this like it's actually just a liquidity grab. You can think it like that. But I don't want to just confuse you. Just try not to confuse everything up. As you see, the EMAs are not crossed back to downside in 4 hour chart. Okay, the down one, these one are daily, don't forget that. So the EMAs are not cross-backed, so you can see this market structure break with has like very low in effectiveness, so you can go with it. But as you see, there are small down moves inside of it, and there's a raid inside of it. So when you are trying to go against the market structure, try to go with the external liquidities. Okay, so when you go with the external liquidities, you will be more safe when the market structure is not aligned but the flow seems still good. Okay, so when this situation happens, I try to go external of 1 hour at least. So for example, we are in here. I'm going to focus on this high to this low until we break above it. So we break above it. So when I try to go with there, this is the market structure range I would have on my watch list. So I would look at it. So I'm going to look at it, this market structure, and try to long below here. But as you see, I didn't get the ATM set up, so I'm not going to long it. But I would if I get it, because the daily and 4-hour flow is still bullish strongly. And it's basically like that. You can do this with every pair, everything. As you see, when the flow is clean, the market structure is not matters that much. I mean, market structure is always matters, but as you see, daily market structure aligned and 4-hour is not aligned all the time. Like it breaks back here, but it's just a daily up move inside a daily bearish flow, inside a daily bearish market structure. So the lower time frame market structure break is just the mitigation or liquidity, small liquidity grab inside the daily flow. So this is actually just clears out the, I don't want to call fake market structure breaks, but it is kind of like that. It doesn't affect the long-term direction. Okay, so when you look at it daily in here, you will see that this too clear market is going lower, right? It break the structure here again. The structure is bullish. So we were in this range in here. Hey, this is not the best example, but as it was going lower, EMAs were too clean, and it just flipped back above here. But as in this candle, it just crossed down. But when you focused on the market structure solely, and you wouldn't get the alignment here. But when you try to long in this order block, as you see, this order block just violated. After this candle, you could have seen that the flow is bearish, even though this market structure is broken to the upside. What we do to eliminate these kind of situations is that we always look at the market structure of 3 time frames. Like when we go to the 1 hour chart, we would see that 1 hour is now bearish, so we wouldn't long it because the 2 of the 3 higher time frames is not aligned. But you can always, as I said, keep it simple with the EMAs like this one, and you don't have to struggle with it. And just focus on the looking at the market structure as well. And when the market structure and flow is aligned, that's where A+ setups are coming from. So when I'm trying to use EMAs when I'm busy, I'm actually marking the higher time frame market structure and just looking at the flow. Oh, okay, now it's aligned. I'm just banging every setup I saw. So, but if the alignment is not there clearly, and let's say there's just this kind of situations, I do the 2 of the 3 high time frame situation. But when the situation is like that, the EMA of the flow is clean, the market structure is clearly on my side to the bearishness, I'm not even checking it. I'm keeping it very simple. So that's it. Just if you have any questions, just ask in the group about this one. And just a reminder, this is the 10 EMA, this is the 20 EMA, and I'm keeping the daily EMAs just on my chart, like adjusting here. You can choose the period of the EMA here, and you can keep it as chart. When you make it as chart, it's just showing the time frame that you are currently in. But I made it daily, so it's just showing me daily EMAs in here. These two, the thicker ones, and these are the smaller ones. These are the 4-hour ones. They are showing me the 4-hour currently. And you can do, like the ICT says, you can do daily and 1 hour, but I don't like it because, as you know, when we have the time frame template, the daily and 4-hour is a little bit better for me to use it for day trading flow. But if you want to scalp with the 1-hour structure, which is the mid time frame of the scalping template, you could go with that as well. But I don't scalp, so I don't utilize the 1-hour as my main time frame. I utilize the 4-hour, so you can do it. Have a nice day. Just to give an example, as you see, daily market structure is bearish, so then we go to the 4-hour. As you see, 4-hour is bullish. Now if you just look at the 2 time frames, what we do is that you would just bother with it that now 4-hour is bullish, daily is bearish, what I'm going to do. But you don't have to. What we do to eliminate these kind of situations is that we go to the 1-hour and try to get the 2 of the 3 higher time frames. So the 1-hour is bearish currently. The market structure has happened here for 1-hour. Now this is the high taken. If market breaks that high, now the 4-hour and 1-hour will be bullish. So we are going to go with them. But if it still stays like bearish and it rates this high, I'm going to take the short, because the daily and 1-hour will be aligned. So you can simply look at these kind of situations with the EMAs as well. As you see, the flow is still bearish, so this breakup structure is not mean much, so just don't focus on that. But the levels of it means much. So as you see, this is the bullish 4-hour, and it was the extreme of the range of the 1-hour. So the rate happened at the external. So this could have been a setup if it were inside the kill zone. Yeah, but this is a nimble setup, so I wouldn't take it because the alignment is not there. But as you see, this could be a situation. So the levels matters a lot. It doesn't mean that you just need to forget the 4-hour because we have 2 time frames that are aligned, and also EMAs are showing the downside. No, the levels matters a lot. Both for take profit and managing your trades from there, and also setups may occur there. So just keep in mind that we eliminate with the price action, but you can always add your technical analysis to these kind of indicators to ease things up. You don't have to focus on solely market structure and fuck your brain up. See you.